There's over 5,000 alternative coins on the market, and they're only starting now to offer trading services for the lucky few that are deemed to be legitimate.
With that desperation, the idea of investing in something that is unproven, with the idea that maybe this is where I make my fortune.
Hey gang, it's Monday, July 26th. Victor and listeners, welcome to the Behind the Numbers Daily, an eMarketer podcast made possible by VTEX. I'm Marcus, and today I'm joined by two folks. We have with us Victor Chatenay, fintech analyst looking at the digital transformation of financial services.
Hi, thanks for having me.
Hey chap, thank you so much for hanging out. We're also joined by Dan Van Dyke, VP of Content and Head of Financial Services.
Hey, thanks for having me back.
Hello there, yeah, thank you for hanging out again. So, today's fact. This is amazing. This is why I love Dutch people. I love Dutch people for a number of reasons, but this is one of the reasons. If you die alone in the Netherlands, someone will write you a poem and recite it at your funeral.
Wow. Starting off the morning and the podcast thinking about death. I love it.
Sorry, it's a little heavy. But it's such a sweet sentiment. So it says, for those lonely folks who pass away with no next of kin and no one to claim them, at death there will be at least one person at their funeral, a poet. In response to these so-called lonely funerals, the country implemented the ritual of lonely funeral poems, in which poets research the deceased, write a poem in their honor, and recite it at the funeral.
I love that. That's actually really sweet, in all seriousness.
That's I know it starts pretty dark, but then it's got a nice ending. More reasons to love the Dutch. The Netherlands is the world's biggest flower exporter, so we have them to thank for all the flowers, not all of them, but most. The Dutch also own more bicycles than any other country in the world. The Netherlands is home to more bicycles than people, with over 2 million bicycles in the country. The country constantly ranks as one of the healthiest in the world, in part because the Dutch cycle an average distance of 3 kilometers a day. It's like 1.6 miles, and use bicycles for over 25% of all trips, compared to just 2% in the UK. Come on, England! Scotland, Wales, and Northern Ireland, let's get it together.
I love these facts. And I also love the fact that, Marcus, I brought up in the pre-call that I felt outnumbered because you and Victor are both based in the UK, and you, as an American with Dutch roots, you're making me feel very welcome.
Oh, good. And I secretly want to be Dutch. I wish I was Dutch.
I also think we're in the wrong country. I mean, the Netherlands sounds amazing, and here we are in the UK. No one's writing me a poem, that's for sure.
Today's real topic, anyway, is cryptocurrency 101. So, gents, cryptocurrency headlines are getting thrown at us from all angles, it seems. Cryptocurrency marketplace Coinbase had an IPO. El Salvador's president has proposed using Bitcoin as legal tender. And a panel of cryptocurrency experts predict Bitcoin will overtake the US dollar as the dominant form of global finance by the year 2050. That was written in Forbes. But what the devil is actually going on? We've got a couple of the gents here to help us, walk us through cryptocurrency, what it is, how it's being used, how many people use it, and which ones are which and why. So let's start with Victor. Do you want to explain what cryptocurrency is, first of all?
Sure. I mean, I think a big part of the confusion around cryptocurrencies is when you read articles about it, people tend to explain it from a computer science perspective of how it actually works. Whereas I think a much easier way to wrap your head around cryptocurrencies is to understand what they're for. And basically, all cryptocurrencies are based on blockchain technology. That's the technology that anchors the sector. If it's based on blockchain, it's a cryptocurrency. All that is a decentralized database. So if you think of a traditional centralized database, for example, your bank has a centralized database where they know how much money you have in your bank account, who you've paid, and since you've had an account with them, your name, your address, all of that. They control that information on their centralized database. Another example could be, your Facebook profile. All the pictures you have on there, everyone you've ever messaged is stored on a centralized database that Facebook has control over.
That's scary.
And so the big difference, contrast with blockchain, is that it's a decentralized database. So rather than being controlled by one company or one person, the database is managed across a whole network of thousands of computers across the world by voluntary groups of people that have no connection to each other, but just agree to maintain what's called the blockchain network.
And what's the benefit of that?
Well, so the first blockchain network is the Bitcoin network.
Yep.
And here, all it is a database that records how much Bitcoin each person on the network has. And every time, let's say we both have an account on the Bitcoin network, if I send you 1 Bitcoin, the database upgrades and updates to show that you have 1 more Bitcoin and I have 1 less Bitcoin.
Okay.
The whole purpose of a Bitcoin blockchain is to keep account of how much Bitcoin each person has. That's literally the whole point of it.
Okay.
And the context for creating that was to create a payment system that was outside banks. So the idea is this decentralized database can be used for us to transact with Bitcoins, and we don't need to rely on banks anymore to do that for us.
Okay, and Bitcoin, that was the first cryptocurrency, right? Created 2009?
Yeah, and the data is important because it's at the time of a financial crisis, and the core developers of the Bitcoin blockchain in the beginning clearly had a goal of creating a financial system that was separate from the ones that they considered to be failing during the financial crisis. And so again, the whole point was to create a financial system separate using Bitcoin.
Right. Okay. Because this wasn't created by a banker. It was developed by an anonymous developer under the pseudonym Satoshi Nakamoto.
Yeah, and technically that could be a bank. We don't know who or what is Satoshi Nakamoto. It could be a person, it could be a group of people, it could be a company, it could be a government.
It could be me.
We don't know.
He could even be on this podcast. Who knows?
Oh, uh-oh.
I say nothing.
It's Victor. Daniel, that sounds about right to you in terms of what cryptocurrency is?
Yeah, I mean, at its heart, it's a misnomer because cryptocurrency, the word currency in it is more aspirational than reality today. Cryptocurrency, its fundamental utility is as a store of value, and its value keeps rising because of the resonance of that kind of David versus Goliath, underdog versus evil establishment narrative, I think that's playing out. The interesting thing that you're seeing too is that Bitcoin is no longer a scrappy underdog. Cryptocurrencies as a whole are no longer scrappy underdogs. And what you see is as people or entities or things that have historically been underdogs get bigger and bigger, the harsh light of regulatory scrutiny, media scrutiny, all that shines brightly on you. And so you're starting to see things like backlash against the environmental impacts. And I definitely consider myself one of those crypto curmudgeons. So I'm excited to talk a little bit with Victor, who I think brings a lot more of an informed perspective to it.
You talked about them being underdogs at one point, but less so now. Bitcoin reached a valuation of $1 trillion earlier this year, correct? And then fell from, I think back in spring, Bitcoin tanked from May 9th to May 23rd. Over those 2 weeks, it lost 41% of its value. I mean, $1 trillion, you're talking about, Facebook valuation territory. And one of the things that seems to have propelled cryptocurrencies into the mainstream, or at least is trying to get it there, is back in mid-April, Coinbase, a platform for buying and selling cryptocurrencies like Bitcoin, became the first major cryptocurrency company to go public in the US. This was noted by Rebecca Highwile of Recode. She believes that it's a clear sign that crypto is firmly in the mainstream of the financial industry, and it's not going away anytime soon. So, gents, what should we make of the Coinbase IPO, of Coinbase going public? How big of a deal of this? How big of a deal was this, and why?
It goes with what Dan was saying about no longer being the underdog. It's a call for support from the financial institutions and institutional investors that they believe in the business model. And what's useful about the Coinbase IPO is that these investors can expose themselves to the industry and profit from its growth without having to actually invest in cryptocurrencies. So cryptocurrencies are infamously very volatile. We were talking about this earlier, but one day it can help you buy a pizza, and the same amount of crypto can allow you to buy a laptop the next day. So it's a very risky asset to invest in. But if the public markets believe that there is demand for the crypto exchanges, there's demand from consumers to invest in these cryptos, they're more than happy to invest in the shares of those companies. So the fact that Coinbase, and I did have a few numbers, it reached $86 billion in valuation at one point. Today it's back down to 31 billion. So it's kind of mirroring the volatility of what the crypto assets that it offers.
Coinbase, right?
Coinbase, that's it, yeah. And so, but still at 31 billion, I mean, that's probably one of the highest valued fintechs in the world right now. And so it certainly shows that the traditional financial sector, far from seeing this as, a technology that's going to disrupt them or remove them from the equation, they're actually more than happy to, at least some of them, to invest and be exposed to the industry and profit from it.
You talked about the volatility of Bitcoin or of cryptocurrencies in general. I want to talk about why it's liked and disliked. Let's start with the disliked. The main reason American adults haven't invested in cryptocurrency was because they don't think it's legitimate. That was from June of this year. Civic Science polled about 2,700 people. So the main reason people don't think it's legitimate. Number two, the second reason, they don't understand it. Number three, the value was too volatile. Number four, they don't have the money to do so. Does that list sound about right to you with regards to why people don't invest in cryptocurrency or why people might dislike or maybe pessimistic on crypto?
I think that sounds about right. I would add to that list, maybe if people were aware that every time you make a transaction with a cryptocurrency, it is a taxable event that you have to record, that might top the list even. So it's sort of a subtle reason to dislike cryptocurrency that doesn't get brought up enough as I think it should. I would also add to that list high fees too, associated with cryptocurrencies. I think that the margin that folks like Coinbase have been able to shave off of transactions is remarkably large because they are an early mover with scale, and they're an easy on-ramp to this otherwise very convoluted, complicated, needlessly so distributed financial system. So I think there are a lot of things holding back crypto adoption. Some of them will be eased over time, just as consumers become more familiar with crypto and the brands or currencies that are most popular. Some of them will take regulatory action to, for instance, recategorize cryptos as transaction vehicles so that they're not triggering a taxable event every time you exchange one for another. And some of it will take technological advances as well to make sure that the experience of paying with cryptocurrencies is actually better in some way than paying with alternative payment types. And I think the reality on that latter point is most of the time it isn't, except for specific transaction types where, for instance, you need to mask your identity because you're buying something illegal. And I know that gets used as a cudgel against cryptocurrencies, but I would say that that's fair because the reality is illicit transactions are propping up cryptocurrencies.
Why is crypto so popular? If you had to point to one or two reasons, what makes it so popular?
Well, I think one of the probably most popular reasons right now is that it's a way that people assume will get them rich quick. Because of its high volatility, there's a popular concept, let's say, in crypto that's called HODL, which is a typo when someone on the internet meant to write hold when prices of cryptos like Bitcoin started crashing back in 2017 for the first major crash in the price. And so on cryptocurrency forums on the internet, someone wrote HODL, and basically their point was, you hold on to the asset and eventually it will go back up, which is actually, a technique as old as time, a strategy as old as time when it comes to investing. The longer you're in over the long term, the more chances you have that you will generate better returns. And so this is a position that a lot of people have taken with cryptocurrencies. As Dan said, it's not used, even though it's called a currency, it's not used for payments, but it's used to invest. And the reason why it's popular to invest in is because eventually you hope that you can make a lot of money. Because on the internet, you're always seeing headlines from people that got in early, that bought Bitcoin back in 2012 when it cost $100. They bought, say, 50 of them. And today, each one of those costs, $20,000 or worth $20,000. So right. A lot of people want to recreate that success. And this is also why they're targeting alternative coins to Bitcoin, which are not worth $20,000, which may be worth, $2, kind of insignificant, with the hope that if I put a bit of money on that one, it's going to be the next Bitcoin.
So being used more as shares than currency, my next question was going to be, what is cryptocurrency used for? You talked about investment. Roughly what share of crypto is being used for things like buying items versus investment?
Well, I don't think there's any clear numbers about the share, but it's quite clear that the vast majority of people use them to invest. And we know this simply by the fact that Coinbase just did an IPO. And we have yet to see a crypto payments firm being able to attract this kind of valuation or even approach the public markets. And there was a recent report from Gemini, which is one of the top crypto exchanges in the US, saying that there are now 21 million people in the US that own cryptos, or about 14% of the entire population. Now, Gemini is a crypto exchange. So the vast majority of these users, it's talking about it much more from a cryptocurrency investment perspective than anything else. And the Financial Conduct Authority in the UK actually also released numbers on crypto adoption, where today there are 2.3 million people that own crypto in the UK, up from 1.9 million in 2020. So it's steadily rising in the UK as well.
And that first number was US?
Yeah, so 21 million people in the US and 2.3 in the UK.
Okay. There was one study I saw, this is from payments and crypto payment service provider BitPay. 18%, they said, of American adults, roughly 1 in 5 or 46 million people, put another way, said they will likely use cryptocurrencies to make a purchase this year. Time for a quick word from our sponsor, VTEX, and then we'll be right back with a conversation. Retail's next competitive threat may come from a business model or channel that didn't even exist a few months ago. This modern dynamic requires companies to adapt quickly, pivoting business seemingly overnight, something traditional commerce platforms just can't support. There's a new enterprise commerce platform on the rise, one that's fast, flexible, and doesn't require 9 months and $1 million to get up and running. Go to vtexvtex.com/eMarketer to learn more. All right, folks, we are back. Time now to play Subscribe, Unsubscribe. Basically, we're going to go through some of the current cryptocurrencies that are out there. And if you're optimistic about the following cryptocurrency, you subscribe. If you're pessimistic, you unsubscribe. Although no one actually unsubscribes to anything anymore. So you just kind of try to ignore it. So we'll play Subscribe, try to ignore. So let's start with Bitcoin. How could we not? And we'll start with Victor. Victor, would you subscribe or unsubscribe to Bitcoin as a viable cryptocurrency?
I would subscribe. It's the first cryptocurrency that was ever launched, and it remains to this day by far the largest one in terms of not only market cap, but in terms of popularity. It has a very dedicated developer base, developers that are really passionate about Bitcoin and passionate about the project, which, gives it a lot more viability. We have traditional asset managers and financial institutions like JP Morgan and Goldman Sachs that are now offering trading services in Bitcoin. And, what's interesting about this is they are yet to offer trading services, and there's over 5,000 alternative coins right now on the market, and they're only starting now to offer trading services for the lucky few that are deemed to be legitimate, and one of those is Bitcoin.
Dan, how about you?
Yeah, I guess as a counterpoint, I would say that a lot of the advantages that you laid out there, Victor, are due to first mover advantages. And the question is, are we thinking about this like technology companies say over the past decade, where the front runners have continued to accrue scale? Or are we thinking about Bitcoin as really being in the early 2000s? And maybe it's similar to pets.com, where yes, it is the front runner, but the reality is when you peel back the hood, Bitcoin is not a great tool for payments. It's slow, it is volatile, and the fact is that the fees associated with Bitcoin transactions are very high. So I guess, Victor, you know better than I whether the developer community that's associated with Bitcoin can overcome these disadvantages. But I do think that ultimately, with the primary advantage being associated with being number one and continuing to accrue scale as a result, they're ripe for disruption and ripe to be leapfrogged by somebody else.
One of the key reasons why Bitcoin remains number one is also because it's probably the closest one to respecting or being in line with the ideals of blockchain, that is decentralization. There is no, as we said at the beginning, we don't know who Satoshi Nakamoto is. His Bitcoin wallet is on the blockchain network right now, is worth billions, and he hasn't touched it. He hasn't, or they haven't touched it. They haven't moved it. So we can assume that these people genuinely believe in the longevity of a project. Now, if you compare it to some of the other major coins like Ethereum or XRP or even Dogecoin, we know who the founders are of these cryptocurrencies. And every time those guys make a tweet or take a decision, it affects the whole network. So the decentralization argument for other crypto projects is a bit more nuanced, or it's a grayer area than with Bitcoin. And so I think that's a big reason why Bitcoin will continue to be number one, and people will trust to allocate some of their portfolios to investing in Bitcoin, is because this decentralization aspect is so important, because it means that it's shielded from a founder tweeting the wrong thing, or if the US economy collapses, in theory, Bitcoin is going to shield it from that because it's its own kind of ecosystem.
Those are really fascinating points, Victor. And I will say that ties really nicely back to this idea that I referenced at the beginning of stories being incredibly powerful in shaping the fortunes of cryptocurrencies, since like popular trust is at the heart of valuations. And with such a faceless, interesting founder at the heart of this cryptocurrency, and with that paralleling nicely with the decentralization theme, it, I think, does help act as a tailwind for Bitcoin. That said, I think the face of Bitcoin is shifting. So with Satoshi Nakamoto completely silent, like it or not, Elon Musk does have a powerful impact in shaping the value that's associated with the coin and how people think about it. It's
interesting. So I quickly want to talk to you about shifting the value of the coin and how people think about it. I mentioned that back in spring, Bitcoin had tanked. It lost 41% of its value in 2 weeks. I'm wondering if you guys can help myself and the audience understand why. Why is crypto so volatile, and will it ever be less volatile? And if so, how?
Well, because it's so decentralized, and it's an interesting question, because it's kind of the reverse of what I said about decentralization being its strength. It's also its weakness, because as it's not backed by anything, so the value is only kept up by people who are willing to believe in it, by people's belief in the value of Bitcoin. And so that inherently is highly volatile and can change at any moment. So that recent crash in value was likely down to a whole host of factors. One of them, it was the Chinese government shutting down Bitcoin mining companies in their country. I think India proposed a law to ban Bitcoin from its country. News like this make it across the world and then kind of spook people in investing in Bitcoin, much like, news of a country's economy might spook people on other types of traditional financial markets of a specific company. Some cryptocurrency project trying to reduce the decentralization aspect to reduce the volatility. So it's about a give and take between the two.
Right. Let's rattle through some of these other cryptocurrencies. So Ethereum is one that, Victor, I think you mentioned earlier, maybe it was Dan. Ethereum, subscribe or unsubscribe to this one?
Subscribe. I like it. I like the fact that it goes beyond just being a payment mechanism and a store of value to offer decentralized applications and also smart contracts. I think that it's the dark horse in this race, and that it will overcome Bitcoin in terms of market capitalization by 2030.
Wow. Victor, how about you?
Well, I completely disagree with that assessment at the end. But other than that, no, but it's definitely subscribe, because Ethereum is kind of its own rabbit hole in the crypto sector. And whereas, Bitcoin is mainly used as an investment tool, Ethereum is essentially, it's not even a payment system like Bitcoin was supposed to be. From the beginning, Ethereum was supposed to be a programming language, and the Ethereum blockchain is just a decentralized computer, which in and of itself is quite a hard thing to wrap your heads around. But the idea is that developers on the Ethereum blockchain can develop applications like mobile apps, but they call them decentralized apps, and offer a whole host of financial services. So for example, with Bitcoin, all you can do with it is buy it and then hope to sell it later at a higher value. Or you can exchange it with someone else, as in pay for it, hopefully for goods and services, that sort of thing. But with Ethereum, the idea is you can code decentralized financial services like, say, insurance or loans, that sort of thing, where you and I can arrange to have a loan agreement without having to go through intermediaries like banks, or it's all automated on the blockchain.
So we've got through Bitcoin, you both subscribe to that, Ethereum both subscribe to that as well. How about Dogecoin? Dan, we'll start with you.
Don't mention the word Dogecoin, Marcus. You break my heart. We were talking in the pre-podcast session about my experience with Dogecoin. I bought it early, got my parents to buy it early, bought a small amount, lost the wallet. I can see the wallet. I can see its value. It's very big. Makes me cry. I've looked for it hundreds of hours, but it's gone. I think that Dogecoin speaks to the moment. And Victor, you were raising a lot of really fascinating points. One of those that I particularly agree with is the importance of groupthink in determining the price of things. So HODL, for example. I think that the reality is that there are communities that are propping up the value of these cryptos, and the ability for communities on Reddit, for instance, to, in a concerted way, manipulate the market is incredibly powerful to determining the value of these things. Over time, we've seen regulated equities and securities industries have to do away with that action. So I imagine over time there will be some backlash to what's going on, probably. Victor, you can tell me if I'm wrong. But in the short term, I think that you'll continue to see this joke currency, which is essentially started to say that crypto folks will invest in anything. They'll even invest in this stupid joke, and has become kind of a viable payment tool in and of itself, and stops being a very funny joke, or maybe just became meta. It's a fascinating thing playing out, and I think it'll continue to grow over time. Should it? Probably not. It's not very useful for anything other than being a meme.
And this is the coin with the picture of the dog on it.
That's right.
Just for listeners, yeah. And Dan, just to clarify as well, you lost it because you lost the device that it was on. That's right.
I had a tablet that had a hardware wallet on it. My mistake for not backing it up. It's a rookie move, but
This to me, this has to be the biggest disadvantage of crypto, is that if you can potentially lose the whole thing.
Yeah.
That's again the decentralization aspect. Because banks aren't involved, there's no one you can go to. It's on you to keep your money. And some people think that's beautiful, and some people think, well, I don't want to have that kind of responsibility.
Yeah, I'm one of those people. Victor, what do you think about Dogecoin? Subscribe, unsubscribe?
I would say subscribe. I mean, as Dan said, to paraphrase, I think it's about how long is the joke going to be funny for. But what's interesting with Dogecoin is, and it's an interesting parallel to the GameStop debacle back in early January, where Reddit users band together to push its value up. I think it was something like 400% to kind of stick it to the hedge funds, as they put it. And you kind of have this same thing happening with Dogecoin, where it's a lot of Generation Z and millennials that have grown up in a financial system that they no longer trust and that they don't really have much respect for, because after the 2008 crisis. And so I think to them, it's sort of a situation of money isn't real, so why does it matter? Might as well put it in Dogecoin. And I think it's not only a love of memes, but it's also a love of watching these financial analysts on Wall Street scratching their heads and pulling their heads out and not understanding what the hell is going on. I think that's a big part of the joke. And I think that feeling of frustration, unfortunately, is unlikely to go away for a lot of younger people. And as a result, the joke will carry on going. And that's really the strength of Dogecoin.
Just to add like a serious element to it too, like there's a lot of valid desperation felt by millennials, people in our age group, because we don't have the same financial opportunities that were afforded to previous generations. And with that desperation, the idea of investing in something that is unproven, with the idea that maybe this is where I make my fortune, becomes incredibly attractive. And the stick it to the man undertones that are associated with that action make it even more so.
I just wanted to quickly read out a tweet, which I think is also quite important for Dogecoin, from Jackson Palmer, who was a co-founder of Dogecoin back in 2014. And he tweeted last week that he was pulling away from the crypto sector, was no longer going to work in it. And he made a really powerful tweet where he said, Despite claims of decentralization, the crypto industry is controlled by a powerful cartel of wealthy figures who, with time, have evolved to incorporate many of the same institutions tied to the existing centralized financial system they supposedly set out to replace. So there's also, to bring it back to the Coinbase IPO, there's this fight happening right now between the early developers of the blockchain and cryptocurrency projects that were trying to build something separate and different to the traditional financial system. And what we're seeing now with Coinbase IPO, and I think that's what Jackson Palmer is referring to, is that the traditional sector has actually poured money and is fully integrated into the crypto sector. And so it's not for me to tell listeners how they should feel about that, but it's certainly a fight that is happening right now between the two sides. Mm-hmm. And, some people think it's a good thing to put cryptocurrencies in the mainstream. You have to work with traditional financial institutions. And on the other side, you have some core supporters that would say that it kind of defeats the point.
One more cryptocurrency for you guys. Tether, subscribe or unsubscribe. Victor, we'll start with you.
Definitely unsubscribe to that one. Tether is a stable coin. So we've been talking a lot about the inherent volatility of cryptocurrencies. And so one of the more recent innovation in the space are what's called stable coins, which are still cryptocurrencies based on the blockchain, but they are supposed to be backed by real assets that give them value and make sure that they don't go up and down $1,000 a day, essentially. And Tether is one of those. And the idea here is to make it easier to transact with cryptocurrencies, that you can actually use it for payments as opposed to just as an investment. But the issue with Tether is the whole question of whether it really does have assets in the background that give its cryptocurrency value, or if it's all just a lot of hot air.
How about you, Dan?
Yeah, I mean, to build on Victor's point, that question is a very valid one. So unsubscribe, and I want to read a statement by the New York Attorney General, Letitia James. She said, Bitfinex and Tether recklessly and unlawfully covered up massive financial losses to keep their scheme going and protect their bottom lines. Tether's claims that its virtual currency was fully backed by US dollars at all times was a lie. I think that says it better than I could myself. I don't know if legally I'm allowed to say that Tether is a fraud. I definitely don't want to say that Tether is a fraud. I would say that if it ever gets made into a movie, they should see if Scorsese is willing to direct, because he did a great job on The Wolf of Wall Street.
He did indeed.
And to bring it back to one of the, why do people dislike cryptocurrencies? I mean, stories like this are a big reason that people stay away and limit adoption, because you just have these alleged scams. Just be careful of illegal repercussions with some of these larger crypto projects. There's another really famous one about the biggest Canadian Bitcoin exchange going bust in 2019 after the founder allegedly died in India, taking with him all the private keys, meaning that investors were locked out of the exchange and couldn't withdraw. I think it was about $200 million. And to this day, there's a lot of people are assuming that he simply faked his death and is relaxing on a beach somewhere with people's millions in a traditional Ponzi scheme kind of way.
Wow. Gents, let's finish with this. So we talked about cryptocurrencies and the fact that by and large they're used as investment tools, but there are some currency applications to them. Research associates at Insider Intelligence, Adriana Nunez, was noting that more payments firms extended their reach into the space amid surging crypto valuations. She points to some familiar names who are getting involved with or furthering their investment in crypto. Visa, she says, introduced new crypto card offerings. Visa and MasterCard announced plans to integrate crypto into their network. Square, who's had a hand in the crypto market since 2018, invested in Bitcoin. PayPal launched its checkout with crypto feature. And research analyst Grace Broadbent on our payments and commerce team here at Insider Intelligence notes that, quote, Apple posted an opening for a business development role that will strike partnerships with alternative payment providers requiring experience with digital wallets, fast payments, buy now, pay later, BNPL, and cryptos. The new employee will work with the Apple Pay and iPhone wallet app team, close quote. Lots of different announcements from different established companies getting into this world. What should we make of all this? Is it too early to tell? Are there certain ones we should be paying attention to? Is it just noise?
I think long story short, it means that these companies are rather bullish about the sector and are expecting huge growth in crypto adoption, that consumers want access to these services, whether it's trading, whether it's payments. And so they're trying to get ahead of it. I did have a few numbers on this too. I mean, the companies that have already gone into it have had huge revenue thanks to it. I think it's Square, which is Jack Dorsey's payment company, that brought $3.51 billion in Bitcoin revenues from its Cash App, which was 10 times more than the same period last year. So that in and of itself kind of shows that there's a lot of money to be made for companies that start offering crypto services.
That's all we got time for this episode. Time now for the post-game report, where we summarize the key takeaways in 30 seconds or less. Victor, we'll start with you. We've talked about a lot, but if you have one or two takeaways for the audience, for the listeners, what would they be?
I would just say that cryptocurrencies are here to stay. We're going to see huge consumer and business adoption of the technology.
Mm-hmm. Dan, how about you?
I would agree with Victor. I would also say that this is like the early 2000s. Cryptocurrencies, great idea. The specific cryptocurrencies on the market today, a lot of them are going to go away in the future, or a lot of them are going to be leapfrogged.
Roughly how many are there, did you say?
5,000.
5,000, oh, good.
And it's important to note, most of them are irrelevant in the sense that the top 5 control 90% of market cap.
Got it. Okay, interesting. That's all we've got time for, unfortunately. Thank you so much to my guests. I thank them in turn. Thank you, Victor.
Thank you very much.
Thank you, Dan.
Thanks, Marcus.
Thanks to Victoria, who edits the show. Thank you to everyone listening. Check out our Industry Voices videos that stream every Monday, where we speak to marketing leaders from big brands. This Monday, today, July 26th, our Marissa Koslov speaks to Isis Ruiz from Norwegian Cruise Lines about holiday preparedness. Head to the eMarketer Daily newsletter, LinkedIn or Twitter for the link to stream. Also, tomorrow, June 27th, you can tune into a Tech Talk webinar with Feedvisor, talking about 2021 Amazon holiday strategies. To sign up for that, you can click the link below in the show notes. I'll see you folks tomorrow, hopefully for the Behind the Numbers Daily and eMarketer podcast made possible by VTEX.